Hi, I'm Steve Spencer. I'm a partner at SMB Capital, a prop trading firm in New York City where we focus on stocks, futures, and options. Our focus as a prop trading firm is moving in and out of positions intraday. Probably around 80% of our trading activity is intraday, but we do hold positions overnight. And when market conditions are favorable, we will hold for multi day periods. And so, as part of our weekly review, I spent some time discussing big picture market conditions as they will impact our willingness to take more or less risk overnight, as well as which intraday setups to focus on. This 10-minute clip is from the beginning of our first February weekly review. I spent some time discussing the S&P and the Nasdaq 100, starting with a multi-year time frame and drilling down to 30-minute charts. As the market has a strong underlying bid now, traders have moved to focus on more technical upside breaks and also a willingness to take on some more overnight risk. I hope you enjoy the discussion. Let's start with the monthly chart so we can kind of see where we are. We're, a year plus into bear market. So we want to see, kind of do an assessment and see kind of what things look like. So we zoom out, we can see the secular bull market starting way back here. A lot of very low volatility, slow uptrends in there. The occasional cyclical bear market here. I guess this bear market right now has obviously lasted longer than prior ones that we've had during the secular bull run. So the question will be, over the next 6 months, will this end up being labeled another cyclical bear market or secular? Really will depend on kind of what happens with the macro over the next 6 months and the Fed and earnings and everything. But what we can see on the SPYs is we came into the multi-year uptrend on the monthly. If we zoom in, we had a nice bounce in October. The SPYs put in the low, the S&P put in the low in October. And since then, been gyrating up and down, but now we broke to the upside. And then as we look at this chart here, you're probably starting to think, wow, I've seen charts that look like this in the daily time frame or the intraday time frame. And yep, there have been quite a few. It's classic reversal pattern. You're in a downtrend. You try to reverse and bounce like we did here back in July. We had that June bottom, strong month in July. August started really strong. You can see the wick on the monthly right here. This was the August high. We made a new low, came back up, held higher. And so you have this reversal pattern setting up with, let's see, we're at the beginning of February now. Let's see where February ends up closing. Very possible. This wick that's developing here could be similar to August, where you get the wick and you get the reversal and you get a weaker close. Does it mean we're going back down here? No, that's, we need to see earnings. We need to see a recession. Earnings come down more. We need to see re-acceleration of inflation potentially. A lot of things would have to happen to get the market to take out these lows. So that's kind of on that. If we go to the zoom into the daily, you can see the October low a little more clearly. I started talking about probably in this bounce here, and then again 4 weeks ago when this bounce started, this idea that we could have a bounce back up to the August highs, and people will get really bullish, and that will be the greatest risk reward on a short entry, because you will get a pullback of some sort, and potentially if you start to get some macro cooperating factors, you might get a nice size pullback. So even if we zoom in on go back in time a little bit, and we look at the June low, the kind of the nice pop off of the June low, the higher low here, failure to break through the initial bounce high, a failure to break down, and then eventually taking out the bounce high here in the middle of July, coming into July earnings season. And at that point now, I'm not remembering what we were talking about. So we were saying, okay, stuff is strong. We're now coming into the big boys reporting this week that basically just occurred. And we came in with strength into that week and we went higher. And then we went higher for a couple more weeks. And at that point, I think people were saying, oh, this is, when this signal happens, the market retraces this much, that the bear market's over, blah, 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 blah. That's not how statistics works. You can't, you cite a few examples. And no, we actually went back down to the low. We made a new low. And now we're coming back up here. So what we have is a very strong market starting here on this day right here. Remember, we're consolidating. We'll see it more clearly on the Qs where we're consolidating at the low, but we're consolidating on the SPYs, just nowhere near the low. And this had two ways to go. It could either break to the downside here or to the upside. It broke to the upside. And since then, you see a couple of red bars. This was a nice day of selling. We had the gap down and then we resumed the uptrend. We had a gap down on this day. We had some selling and then we resumed the uptrend. About 4 weeks now into this. This is, I guess, 4 weeks in a day. So this is, or maybe it's 28 trading days, because we had one day the market was closed for Martin Luther King. So we have 20 trading days, sorry. 4 weeks, 28 calendar days, where the buyers, asserted control and we are in a trend. And so, if we zoom in on the 30-minute, it looks like a rising wedge. So higher highs, higher lows. And, we've had several, well, first of all, this one here, the first pullback after we broke to the top of this consolidation was a test just of the top. Then we started a trend here, hard 1 day pullback, gap down. And then we basically started to form an uptrend. We're making a higher high, higher high, higher high, higher low, higher low, higher low. We'll see where this, I do think that it's very reasonable to assume that regardless if this, the high from last week is the high, or if we move into the 420 to 425 area, that a retest of like 400 to 405, like that's how I'm thinking about it. So get people nervous, maybe even flush through 400, and then we'll kind of see. So the Qs, we were in a strong downtrend. Here's the monthly technology. We've talked about this a bunch of times, just was in this enormous, just incredible run. This is a log chart. You can kind of see it. There's a double, a double, a double, and, doubled 3 times, started to ride, kind of trend outside of the uptrend channel. And it wasn't until we hit the bear market last year that we actually got back inside of the channel. So, we're still outside of it even in Q1 last year. Then in April, it broke through. And we came to the bottom of the channel here. And that's when in October I posted that monthly chart where, maybe we will hold the bottom of this channel or slice through it like we had a couple of times prior and catch a bid. And then maybe over the next year, we can start to, move back towards the top of the channel and kind of earnings will have a chance to catch up. Anytime you have an uptrend like this, earnings, over a multi-year period, that means you're going to have a lot of earnings growth. The issue is, does the price start to outpace the earnings growth, which most likely was happening here. And so maybe the Qs, I'm just making this up. I don't know what the Qs trade at as a multiple, but maybe it had the Qs at a 25 P, and then maybe, or maybe it was like 20 at the bottom of this channel and 26 at the top, then maybe got to like the low 30s up here, and it just needed to come back in. And now obviously earnings estimates have come down on these names, on pretty much all of them, I think. And so now that even though it's come back down, maybe the multiple is, above 30 or something like that. So the question will become over the next 4 or 5 quarters, do they resume the earnings growth start to reaccelerate again after a couple of weak quarters, or does it not? Do they actually guide down further into a recession? And that's what kind of gets you to test the low and potentially take out the low. So that's bigger picture. If we zoom in on the daily, so we were consolidating here at the low, here or just above the low. Here's the low, that reversal day in October, rolled over again, put in a higher low, but we didn't start a trend here. We had a lot of selling, whatever this was, in the mid 290s, kind of where it broke down from previously back in September. We had a gap up day here. That was the day CPI, that overreaction day, which I found to be shocking how much we went up on that decent CPI print. We were actually up here at 299, 300 in the pre-market. We were sold all day, and that was the beginning of us. This is where people became bearish. Even I was pretty acknowledged that you come down like this, and then you fail to bounce, and then you spend like a week down here. That's not good. That looks like you're going to test the low, or So but then on this Friday, we gapped down. Selling 2 out of 3 days hard selling. We gapped down to here. We sold right on the open, but we held 260 and we closed at 269, and like that was it. And to me, like part of my job doing the morning meeting and talking to the traders is saying, hey, that's different, guys, and trying to get people to like kind of buy in over the next week or two to say, hey, like maybe we should be looking for different setups. Maybe we should be buying stuff on pullbacks and things like that. I think by here, definitely people's attitude started to change, but people didn't want to chase. But that's when people started like trading small caps and then looking for things like lower price things to break out, and et cetera, et cetera, et cetera. Anyway, this was the first pullback attempt since we started bouncing right here, and immediately was erased with this, a stronger, as hard as the selling was here, the buying was stronger. If the buying is stronger than the selling, and also obviously all these days of buying that preceded it, like you're in an uptrend. And so the question becomes, what's going to happen when we get back up to like this area here, or the day where we sold off from that CPI print. And the first time we got up there, we failed. And then we added this day of selling. And then on the Fed day, the other day, we closed above it. Things are extremely overbought now. That's why I tried to short the Qs a few times yesterday. And it wasn't until the third time that it actually worked quite well. The first 2 times it dropped like $1 quickly, then made new highs. And that's kind of where we are. So here. So let's see what happened yesterday. So we just were so extended here. So some selling came in front of, I think I've said this in the morning meeting yesterday, like, why did we get sold here? Well, we had, Apple, Amazon, and Google reporting after the close. We had just gone from 293 to 313. So we went up like 20 points on the Qs. It's normal to like take some profits. If the numbers are good, I can buy tomorrow morning, whatever, a little bit lower, a little bit higher. And so the next one, also we have the jobs number too. So the jobs number comes out. It's very implausible that we actually had over 500,000 jobs created. So maybe that'll get revised down to 300 or something, because it was such a strong number, and because we'd ran up a bunch in the prior few days. Of course, the initial reaction is going to be a sell, because the Fed is going to be like, whoa, not only are we not getting rising unemployment, we're still getting falling unemployment. We're at 50, 60-year lows. This is not good. Now, the silver lining was, I think showed that there was no wage pressure in the numbers. I didn't actually go through the numbers, but I saw a couple of people tweet that. And so, okay, well, no wage pressure. That's really what the Fed cares about. Let's buy. So we bought, we bought up to like, where we kind of rolled over from the prior day, and we rolled over again. So, when we come in on Monday, we'll have like, we have this resistance up here. Let's call it 310 to 312 on Thursday and Friday. And if we can't get, an hour close on the hourly back above 310, we're probably going to be testing, this at a minimum, the low from Friday morning, more likely the support from Wednesday afternoon. And that's what we'll go there.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills, because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.